Hello, everyone, and welcome to Market Update, where we're looking at everything June and giving you the inside running on what's happening on the ground, with a little asterisk that some of the data is a little bit laggy. But to unpack all of that, I'm joined by my two wonderful co-hosts, Dave Johnson and Cate Bakos. Hello.
Good morning, Mike.
Hello, Mike. Dave's in one of his frivolous moods today because he's jumping on a plane and heading to Bali tomorrow.
Yes, very much looking forward to it, Cate. Not long to go. One more sleep as the kids count down the sleeps.
Yeah, we're not talking about scuba diving or windsurfing or anything like that. He's just telling us about the drinks package on offer at the facility. Bar is open all day long. Very excited.
Yeah. Paid for in advance, so nice and easy. And you've got 3 kids, you don't have to muck around when you get there.
Yes, we heard all about your
great time.
We heard all about your affluent life in the eastern suburbs of Melbourne last week, and now you're slumming it on holidays. And just in case you're thinking, oh, Bali, that's kind of like the cheap Aussie destination. Not the way Dave does it, ladies and gentlemen.
No.
He's going the tonk.
Who are you travelling with, Dave? What carrier?
I think Virgin. So just regular.
See how he paused there? He was trying to figure out how to not say private jet.
He just doesn't want us to know he's on a Jetstar 767 with 2 toilets and 3
Could
kids.
Be, yeah.
All right, let's get into the data, ladies and gents. And surprise, surprise, the perennial performers, Brisbane, Adelaide and Perth, are galloping away, although we've seen Brisbane moderate a little bit. So just run from Brisbane, Adelaide and Perth consecutively. Brisbane 1.2 for the month, making 3.7 for the quarter. Adelaide 1.7 for the month, making 4.6. And Perth 2% for the month, making 6.4 for the quarter. And that puts Perth at an annual growth rate of 23.6. Evans above.
Yes.
It's really those 3 capital cities just seems like there's no finish line, doesn't it? Particularly Perth. But look, what we have seen is the rise was 0.7 for the month, and since February, the rises have been between 0.5 and 0.8 nationally. So, that's beneath 10% growth a year on average, so 6 to 9.6% if you analyse that 0.5 to 0.8% range. Obviously, the standout is those 3 capital cities, but, we did see Brisbane potentially slow down a little bit. I mean, still above 1%, but they are really the 3 that are flying the flag for the rest of the country in terms of price rises, aren't they?
Well, Melbourne's letting the team down for sure. It's the only capital city that's recorded negative, which
a bit like the temperature at the moment.
Yeah, it's painful. And at the coalface, it certainly felt like it hasn't been gaining pace at all, even with as we've talked about before, the types of properties that I target. Sometimes it's fair to say that I'm not getting an accurate cross-section because I might be going for premium properties or high-priced properties that, are highly competitive, and that's why they're getting a buyer's advocate. But it has felt soft at the coalface. I've felt like I've been picking some nice low-hanging fruit, and my auction success rate is testament to that, because I don't usually have an auction success rate as high as it currently is at the moment. But Melbourne is interesting. I'd say that even a minus 0.2% performance for the month is a pleasant surprise based on the listing volumes that we're dealing with.
How much do we think the headline inflation figures, which just came out and surprised on the upside, is feeding into that sentiment in and around Melbourne, which traditionally people are buying at a higher price point than they are in places like Brisbane and Perth, although that gap is rapidly closing?
It's a good question, Mike. I think we've got a lot of speculative purchasing. If we have a look at the investor activity in Melbourne, it's fair to say that it's speculative and it's opportunistic. So it's people saying, I'm targeting Melbourne because I'm confident that when the bounce back occurs, it will be substantial. And the latest news on the inflation figure probably dampened that, not necessarily the confidence that Melbourne will have a bounce back, but the timing around when it will bounce back. So it's bought people who are wanting to speculate a little bit more time, because they're saying, well, the next read that we get on inflation buys us another 3 months. And clearly, while there's commentary around inflation being higher, it translates into the potential for an interest rate increase. And while I don't believe that we'll get an interest rate increase with some of the other notes that were shared by our Reserve Bank board governor, I do think that people's sensitivity around the potential for interest rate is a little bit higher. So we're seeing some of those decisions to purchase in Melbourne for investors just put to one side for now.
Yeah, look, I think people are concerned there still might be another interest rate rise, and that's worrisome for them. And if they have lost faith, if you like, that rates have peaked, and there's a potential for one more rate rise, I think that then means, well, if there's a potential for one more rate rise, how do we know we can even trust that there will only be one? And I think that's some of the psychology that goes through people's minds, and then that does cause them to take stock and reconsider potential decisions, and that's the type of sentiment that will put downward pressure on prices. But if we look at one of the key factors that's driven these changes is it's interstate migration. So Brisbane or Queensland, WA, and Adelaide until recently have had much higher levels of interstate migration than historically. And so really people are, have seen value in these cities and states. They've seen, potentially they've seen employment opportunities. They've seen perhaps better climates in Queensland and WA. Maybe not as much taxation on whether it's land tax on investments or taxing holiday homes and that kind of thing. So, these things, play into that bigger picture of what's been happening. And it's fair to say some of the policies, state government policies, say for in Victoria now, New South Wales are looking to do some of similar things with increasing land tax and taxation on second properties, have put downward pressure on prices, and some factors have caused less people to say move to Melbourne than historically speaking. But you think that's got to start to change, purely because affordability is becoming much more relevant for Melbourne in historical terms. Brisbane is more expensive on a median level, at least, for units, houses across the board now. And even some of Adelaide's median levels are approaching Melbourne's. So, it's not unprecedented, but that sort of picture is sort of only once in every 10 to 20 years.
Yes, it's out of equilibrium, right?
Yeah, exactly.
Now, one thing that I flagged probably for the last couple of months is the question: how can the rents in Perth continue to soar when we're seeing a huge influx of investment into the state? Perhaps we're starting to get an indication of that, certainly in the annual change in unit rents, which is, it sounds bizarre to say this, but it's down to 13.7% growth over 12 months. It's just bizarre. Perhaps a little bit of a downturn, but broadly speaking, the markets that are performing very well, and the major capital cities, so we'll throw Melbourne into that one, seem to be broadly on the decline, whereas the up and coming markets, or let's say the markets in the doldrums, Darwin, Canberra, Hobart, seem to be on the uptick. But again, we're peaking at, say, 3.7% annual growth in houses in Darwin, whereas the others, the lowest rate is Brisbane houses at 7.8%, which is far too high for a stable market, right? What's your read on that?
Yeah, well, look, I think it's probably 3 or 4 months I've been putting it on watch in terms of a trend with rents either plateauing or falling by about 0.1% each month in terms of the national figures. And I think we can call it a trend now because the National Rental Index recorded a monthly rise of only 0.4% in this most recent month. So you annualise that out, obviously it's 4.8%. So we've seen a marked fall after those 3, 4, or even 5 months of plateauing and small pullbacks. So I think we're just hitting a level where it's just becoming too unaffordable, and they just, they can't continue to increase at the pace that they have been increasing for this last sort of 2 to 3 years.
I look at these and think they're not even close to CPI. They're still well above that. So what we've seen is the rate of increase has slowed. They're all still increasing. Everything is positive. There's no negative story here in rents. But typically, as Pete Koulizos said many times, we're just catching up. Rents didn't keep pace with CPI for a long, long time. They were very flat. And at the moment, they're significantly above. The question is, when will they settle back down, and what will the new equilibrium rate of rental increase become? Because we all agree that double-digit rental growth is not sustainable, not practical, and historically we haven't seen it sustained for long periods of time either. It was a dramatic reaction to the conditions, and I think for some states we won't have an equilibrium that is representative of historic, because we've eroded our rental supply. And when we look long term at the number of renters versus fully owned homes versus paying off the mortgage, that historical figure that's always been reasonably balanced is starting to change a little bit. So we're watching history getting rewritten to some degree as a result of the housing crisis.
Yeah, and look, one of those points, and Pete brought it to our attention for the first initially, that the decade average rate of annual rental growth was 2%, so below inflation. I think one of the good news pieces of this rent falling beyond just the obvious of rental properties becoming a bit more affordable for those who are renting is that it's a big part of the inflation basket, rental prices. So that relative to what was happening 12 months ago will actually be positive for inflation numbers moving forward, which hopefully will be good news for the RBA and everybody who has a mortgage anyway.
Dave, we've picked on you already this morning. I want to pick on you again, just because it's because you're going on holidays and we're not. Is it really good news that rents are coming down? Because I don't think it's coming down on fundamentals. I think it's coming down because people are making different lifestyle choices. Maybe they're going into rooming houses, or maybe they're deciding to live with their parents, or buddy up, or go into share houses and those sorts of things. It doesn't seem to me that there's anything fundamentally pointing to the fact that rents are moderating. I think it's just that people are so tapped out, they can't afford these increases after increases. What do you reckon?
I'm sure that's part of the picture, no doubt. But I think ultimately, these are the factors that, go into the mix of what happens with, I guess, any marketplace. And the marketplace we're talking about right now is rents and the supply and demand picture. And, we know that the biggest issue is the undersupply of properties overall. So, I've got no doubt that that's part of what'll be going on. Mike, how much of a part of the picture is that versus just actual affordability realities, whether or not, there's more or less people living under the one roof? I mean, I was at the footy with a mate Friday night, and his daughter's over in London. She's talking to me about her time over there and how she's sharing a property in London with 5 other girls. There's 6 of them under one roof, and he was showing me some of their Instagram stuff. Looks like they're still having a good time despite 6 of them. So I think, they're just some of the decisions that, we all did when we were younger. I remember living in a rental, I think, with five of us, second or third year uni. So I think, making decisions, and you're going, beauty, someone's girlfriend's moving in, we're paying less rent.
Never mind all the wear and tear, but that's another story. I think a lot of things are changing after the COVID response, and we have to expect that. We've seen a lot of couples get together. We saw a lot of breakups, and breakups create, 2 houses from one house when when that dust first settles. And then as people reform relationships, you're then going from 2 houses to 1. We also have to recognise, all of the new arrivals that we had, and it was a massive number. It was a record number last year. A lot of them were students, and students do share houses. So we've had this, catch cry about the increased population contributing, and I'm sure that there was a degree of it contributing to the crisis, but you've got to look at who the new arrivals are. And I also think that we need to have a look at what people with discretionary properties have been doing. A lot of them have been selling. Go for a drive down to, the coast, and you can see lots of for sale boards. And the last one, which is significant, is all of the people that had Airbnbs and capitalised on our restrictions for domestic travel only when we couldn't leave the Australian border. They're not doing so well now because people are able to go overseas and travel, and that demand for Airbnb is not what it was. And I know firsthand a lot of people that have decided to put their Airbnb property back onto the rental market.
Which you get a cash bonus for in WA, or a penalty in
Good old carrot
in Victoria.
and stick.
Yeah, that's an interesting insight. And yeah, some great insights there, Cate. I remember reading something from an economist talking about just the divorces, I think, in the last 12 months of COVID equated to around about a need for 122,000 more homes. And if we think about the National Housing Accord trying to build 1.2 million homes, which started 1 July this month, that's 240,000 a year. So that, like, half of that has been added just by the separations. But yeah, look, the international migration is a big one, and I think in the December quarter we saw a decline that I think the Labor government are really wanting to point to. But yeah, interesting that it actually does increase the formation rates when we get overseas students, but there's always a little bit of xenophobia in the public analysis from my view. I think it's always been overstated, the amount of international investment and its influence on housing markets. And if you look at international investment, places traditionally that get a bit of flack for international investors like China, I think are actually way further down the list than places like Canada and the UK, for example, that tend to be the major investors in Australia.
Yeah, agree.
Yeah, I think those numbers have fluctuated too, though. I think China was higher, but it has fallen somewhat in terms of the investment numbers. I'm sure the FIRB approach is
they got a little bit upset with the Wuhan stuff, and they wouldn't buy our wine and our lobsters and that sort of stuff. I mean, Cate and I went to a conference in the Barossa Valley. Nice work if you can get it, Dave. Actually, you were there as well. And I remember going to the cellar door, and they said, we've got this huge backlog of wine because the Chinese demand has really sort of fallen off. So there was certainly a time.
And then we drank through it all that night. And,
it's reached an equilibrium now. We took one for the team, all right?
Yeah, or two.
We're here to solve these problems. Look, we've got no new listings data, so we can't really speak to that. But there was a cheeky little red box put around old listings, which equate to listings that are greater than 180 days old, with Melbourne having a pretty substantial change. Is that yourself, Mrs. Bakos?
Yeah, a monthly change of 6%, is reasonably significant. We're talking about large volumes. So we went from 7,833 in April to 8,303 in May. So, that's an uptick of 500 odd properties that are floating around on the market that are quite old. It's a hint that our rate of listing activity is eclipsing our buyer take-up. And up until now, we've had, despite the fact that we haven't had growth, we've been pretty static. We've had buyers soaking up the listings, and it suggests that our strong number of new listings are the appealing ones, and so those old ones have been floating around. They're staying on the shelf a little bit.
Interesting.
It's not a dramatic number, but it's noteworthy.
No,
Yeah.
and I guess it's pointing to the fact that there's no green shoots yet, right? But if we can
Yeah.
purge some of that stuff, then who knows what the future will bring? Because as Dave sort of mentioned, we are well below the normal long-term average of where sort of Melbourne sits nationally
Mm.
compared to other cities.
I felt like
Yeah.
we sort of had those green shoots at the start of the year, just a few little ones when we had that inflation figure come through that was lower, and everybody kind of jumped into gear and thought, oh my gosh, we've got a rate cut coming, and the media was saying that was green shoot territory. And after we had the increase in inflation figure, and then we've had a subsequent one, things have been dampened, which is self-explanatory. But really, the message here is just all about inflation, isn't it?
Yes.
It would be interesting to know in Victoria the numbers of second homes being sold since that tax came in relative to historical averages. That would be, how much of an impact that's having.
I feel like every month we put a call out to CoreLogic or somebody saying, please give us some data. We want to tell some interesting stories. You do the analysis, we'll unpack it, and we'll say thank you. Come on, surely they're listening.
You'd hope so. And, they're going to get a lot of exposure in the media across the country with some of these ideas, and we're giving them to them for free.
I know.
I'd love some state revenue office data on Victorian sales from absentee owners. That would be one to really watch and to understand what volume of property are we actually talking about. Because, as an example, I was running some numbers for an interstate investor on a property that they'd circled in on when they said to me, what will the land tax bill be? And it was something like $4,050 a year. Ooh. And they said, oh, wow, that's really high, isn't it? I said, well, lucky you're not an absentee owner. And I punched the radio button that said absentee, and it took it to 40,050.
Oh my gosh!
Yes, I know, that's expensive. And this was not, a luxury property or a high, a top quartile priced property. It was a median priced investment property. So it was quite a surprise.
Now, are these policies about kind of building an equilibrium and I guess increasing the supply of housing to first home buyers and renters, or have you Victorians just blown all your cash and you're desperate to scrape up a bit of a war chest? Like, what's going on down there?
Do you want us to speak for the state government?
Please, Dave. I know you like to represent them any chance you can.
We've got too much debt and not bringing in enough revenue. So we're increasing taxes on property for anyone other than homeowners. That's basic.
It's pretty much as simple as that, isn't it? Yeah, the government debt is absolutely out of hand. That's probably a whole other podcast. Let's talk about household debt and sentiments. How are we feeling as homeowners, as Australians? The consumer sentiment for 2024 has come out. What are the big takeaways for you guys?
This is really interesting. I looked at it and thought, everybody thinks that the next 12 months isn't looking so rosy, but they can visualize good times ahead of that. So the short-term outlook isn't great. Long-term outlook is improved.
Yeah. And the time to buy a major household, the toys index.
Yeah,
that's had a little
kicked up.
That's had a real jump. It's up 4.2% for the month, which ostensibly is 4.2% for the year. So something happened in June where we're like, you know what, we're sick of this. Let's get that Range Rover.
Yeah, the end of financial year sales.
There you go.
So a few things that were interesting sort of in a bit deeper with the time to buy a dwelling index, for example, had the biggest declines in buyer sentiment were in the capital cities that have recorded the strongest price gains. So sentiment inside of Western Australia, Queensland and South Australia is falling significantly. No surprise with what's happening in prices there. So Western Australia fell by 20.5%, had the biggest fall from the locals.
In a month?
In the month.
Oh my gosh.
Yeah.
Huge.
Queensland fell by 15.5 and South Australia by 14.5.
And what do you put that down to, Dave? Because I would have thought the wealth effect would be giving them some confidence.
Yeah, I imagine, the question saying, do you think it's a good time to buy? And they just, feeling no, prices are just going gangbusters, and we thought they would have slowed down by now, and they haven't. So, absolutely not.
Yeah. Does it
and
suggest that they think their markets are overheated?
Yeah, I think so. Yeah.
Interesting.
I think if you think about WA, and here's an idea. There's a quantity surveying firm, RLB, who created their own index, and it was the crane index. And essentially, they just go to the CBD and they count the cranes. Not terribly sophisticated, but terribly insightful.
Interesting.
Yeah. I think if
I subscribe to that one.
Do you? Good. I think there's an opportunity for someone to rip around and create a shoe index where you just count the number of or pairs of shoes at the front door, because I think the shoe index in WA would be absolutely through the roof. And I think that obviously speaks to the WA situation, to the Perth situation. It's not a good time to buy because it's so bloody hard because the competition and the prices, right? It's not, the index is not necessarily about are prices going to go up? It's like, is now the time to buy? But if the competition's so high, even if the prices are going up, it's not a good time to buy in their view. Do you think that's fair to say?
Yeah, I think that's exactly what they're saying. And do you know what's so interesting is House Price Expectations Index, which sort of goes to this point, it's at its equal record high ever. So people think their expectations for how much prices are going to increase are as high as they've ever been.
Yeah, wow.
At 163.8. And interestingly, the biggest gain actually was in Victoria in the last month. So Victorians are expecting prices to rise. Well, their jump in expectation of prices to rise has increased by more than any other state because they're saying prices become so affordable, and particularly relative to, Brisbane and Canberra.
Yeah, it's interesting, isn't it?
That's the subterranean green shoot, perhaps, which is niche. It's not a term that's going to take off.
That's a pretty good term, Mike.
Good. I'm here all week.
Finances versus a year ago was the one that gripped me. And I've read recent articles, I'm sure you both have, about our rate of savings is being eroded. So we're really chipping into our savings with the cost of living. And that's a big figure, 9.7% in 1 month, family finances versus a year ago. I'm quite surprised by that figure.
Yeah, it's interesting, isn't it?
We're chipping into the rate of savings, but not our savings per se, right? Because the data is saying we've got record amounts in offsets, but we're just not adding to that.
We're saving much less than we normally would, but we're not going backwards with our gross savings, but our month-to-month savings is less than it historically has been.
Yeah. Well, is it things like the tax changes and the increased pay scales, or is it, petrol's a little bit cheaper than what it was a year ago? Or they're saying that there's less uncertainty, or there's a light at the end of the tunnel. Don't know. It was an interesting figure, considering we're hearing about savings being eroded.
I don't know if either of you have done the groceries recently, but this is maybe a bit too
we have them
revealing.
delivered.
Yeah, well, you would, Dave, or you'd send your person out, your butler or your hall porter or whatever. I send my man, and he brings our artisan breads on a Thursday. But it is quite shocking the price of produce and things like that. And Dave, you were right on the money previously talking about, gosh, if rents can moderate a little bit, that is a huge part of the CPI basket of goods. But the cost of just random household things on top of energy, and what's the government doing about energy? Here's a few bucks towards the bill. The energy companies must love that. It's not coming down, and the price of insurance products is it's up well into the double digits. It's a bit of a jungle out there.
Yeah, look, certainly when you do buy groceries and go down to the local fruit shop and pick up your blueberries and your avocados and your mandarins, I am surprised, bananas, by the prices, and I think everyone is. It seems so exorbitant relative to what we've been used to, and I think everyone's sort of feeling that pinch. But it is. So it is interesting. But I guess, family finances versus a year ago jumped by 9%, but they're still only at 69.3, which is obviously fairly large negative territory if the average mark is 100 to feeling positive or negative. But it's heading in the right direction, which, probably, as you said, the tax deductions coming up, more net pay pay, people thinking that rates were towards the peak, which is perhaps less guaranteed than it was. So, hopefully that can keep marching towards 100.
Yes. And what happened to that Royal Commission into Coles and Woolies? It seems like they got a bit nervous and they discounted a few things and it's all kind of blown over.
Yeah.
I think Peter Dutton, not very liberal of him, but made comment that he would still interrogate that if he got into power and look at potentially breaking them up to some degree.
Yeah, I mean, I'm old enough to remember there being, places like Jules and Bilo and IGA was a bigger thing and less sort of fringe, but it does sort of seem there's been quite a lot less competition there, which only kind of leads to one conclusion, and it's that I'm sure that Coles and Woolies aren't friends, but they can work in concert with each other. At anyway,
one of the problems with being a relatively small nation.
Yeah. I don't want a horse's head on my pillow or whatever happens to people that say too much.
In through the window.
Yeah. Let's talk about lending indicators. And so this month, because we're a bit short of certain data, and that's not our fault, it's just the data releases. We can only hold on so long because people want to know what's happening out there. There's a couple of extra charts for us to chat about. Monthly CPI indicator showing inflation increase in the year to May with a trimmed mean, the annual inflation measure lifting 4.4 up from 4.1%. Now, we kind of referenced that a little bit earlier in the show, talking about inflation. Give us a read on that one, guys.
Well, I thought it was just interesting to have a look at the curve of dwelling values against the inflation figure. Very interesting. There's no correlation.
No.
So confidence is there. No. This thing's shooting through the ceiling. Yet we've got inflation tracking, at a higher level than any of us want it to be. It's not spooking people nationally.
And I think that's been the story for quite some time. It's not a new thing, right? If you go back in the months from the first rate rise, we sort of peaked at a 7.5% drop in home values or dwelling values. At the same time, everything's kind of trending up with the cash rate. And then we saw, a huge bounce back to the point that we're well into positive territory. It does sort of seem intuitive that if the cash rate goes up and our mortgages go up, then that should really sort of dampen house prices. But the proof is in the data that is a false assumption.
Remember when Pete Koulizos stepped us through that awesome historical... Well,
we've done an episode on this, which
There's
Pete got no correlation, and went through. We did a whole episode on what has happened when rates have risen right at the start of rates rising, and there was no correlation to property values falling in nearly every time they'd gone up. And then I remember Pete having a big debate with one of his fellow lecturers who said it was all about interest rates. And initially they fell, but then they started rising again. And so, once again, we see that the property market has its own drivers, and there's a myriad of different factors that go into it, and interest rates is just one piece of the puzzle.
Yeah.
Yep, well, you heard it here. There's no correlation between the two, according to the big dog, Peter Koulizos, and our recent data as well.
I'll pop the charts in the show notes because they're really compelling if anyone wants to have a look at them.
It tells
and
about
we'll let you know which episode it was at the end, Anne-Marie, please, in the related episodes.
It tells a much better story on YouTube, and I'm holding it up to the screen because, graphically it's a real standout. But, yeah, we'll chuck that in the show notes. The difference between median monthly rent value and mortgage payment, that's a very interesting one that we snuck in. If you go back to sort of June 2019, really all the way to sort of Christmas 21, it's kind of at an equilibrium, and then it is off to the races.
Yes. So this, I've pulled out the violins for the investors. Not the most popular chart to put up in this climate, but what it's showing is there's a massive differential between mortgage repayments and the cost of renting the same equivalent dwelling, and it's skyrocketed. So the ongoing holding costs for a landlord are pretty enormous here when we contrast it to the rent that they could be getting, even though we've talked about the pace of rental increase. It's not showing any kind of alignment.
No, and I think that was also really highlighted in the case study we did in the rent vesting episode as well.
Yeah.
And some of the reasons why that differential has gotten like that recently is obviously the rate rises, but then also the differential of property values to average income.
Yeah. Yeah, there's some great case studies in that one from you, Dave. And yeah, look, the ABC aren't going to write a story on this. And the reality is that there's been a lot of commentary about, well, rents are just going on because investors are passing on the full, increase in their mortgage repayments. But the data is showing that they are not. It's actually quite a bit underdone. So, if that was the case, rents would actually be a lot higher, which is a horrifying thought.
The thing about this rhetoric of landlords passing on the costs, we're talking about a free market.
Yeah.
So
That's
when there's
ridiculous.
pressure, of course the cost will be higher. I mean, have a look at booking an airline flight over the school holidays to somewhere warm. I mean, when everyone wants to travel, then the prices go up and the airlines respond accordingly. And it's just supply and demand and how it works in a free market.
If Coles are paying another 50 cents a kilo for their zucchinis, are they not going to pass it on? Come on.
Yeah, true. Exactly.
But it's also arbitrarily. You can't just go, oh, I'm going to increase the cost of that I charge my tenants because my mortgage is higher. If the market doesn't dictate that, it's not as simple as that. It's such a huge oversimplification.
Right.
Because
it's like
otherwise,
an apartment owner saying we've just had a special levy to, correct concrete cancer or something significant, and they've raised a special levy and they've rolled it out, and everyone's paid $30,000 per resident to, get balconies fixed or what have you. It doesn't mean that particular block is more expensive to rent. The going price of a 2-bedroom unit in that entire row of units will be on par with each other.
Yeah,
I mean, absolutely. Yeah. The market has to bear it, and I think we're seeing the evidence at the moment that rents are moderating, not because of fundamentals. There's not an increase in supply. There's not more housing available. There's not a decrease in population or demand. It's hitting the ceiling of what people can actually afford.
Yeah, exactly.
Dave, I'm gonna open the mic up to you to talk about bonds, unemployment, wage price index, and your listing data, and just give you a real choose your own adventure. It's just going to be a little bit like your holiday in Bali.
Well, look, basically, I do have some of the listings commentary, even though we don't have the numbers out. So nationally, the total advertised supply is nearly 18% below the previous 5-year average. So that's part of what's feeding into the price rises. And just to really put an exclamation mark on that point for Perth is 47% lower than the previous 5-year average. in terms of homes advertised for sale. Now, part of that is because the absorption rate is so fast. So many properties are being sold. There's so many people who want to buy properties in Perth from interstate investors and the like. But it's just being smashed on both sides of the equation, if you like, the supply and demand, which is driving the prices up so far. But on the other hand, Melbourne listings have risen to 14% above the 5-year average. And so that's part of what's keeping a lid on Melbourne prices. And Hobart listings have now been elevated for a couple of years while they've been plateauing and even going backwards. And so they're tracking 46% above average down in Hobart. So, again, often listings are a telltale sign for what actually is playing out in property prices. So there's some of the commentary that has come out. There's more, but that'll do in terms of the listings information, given I'm the only one. Oh, you guys, I did forward that information to you guys, so you can share if you've got it in front of you.
I'm going to let Cate review what she's got there and pretend that I read it and just misdirect by saying, I've got a philosophy around that. Like with Perth, right? People don't want to sell in a galloping market because they're like, well, if we wait 6 months, like we could get another 100 grand. On the same side of on the opposite side of the equation, people don't want to sell at the bottom when they think, we could actually get some growth here. This is probably the worst time to sell, so I'm going to hold on to it. I think a sociologist would call it loss aversion. But it also, there's a caveat to that as well. It depends, what price did they actually pay for the asset? So the market could be deflated, but if they doubled their money over the last 3 or 4 years, that would kind of negate some of that effect.
Yeah.
What do you guys make of that? Am I talking out my hat?
No, but we've got classic chicken and egg here. Think about reasons why a vendor would sell. They're selling so that they can move into something that's more suitable for their needs now. So they're changing needs. But people are reluctant to sell their property and try and buy something if it's a really tight market. But if stock is short and prices are galloping, then that vendor who's saying, well, when I buy, I'll sell, they're not buying. So hence they're not selling. We had this chicken and egg hit us when our market was galloping down here. And it's a bit of a nightmare, and it's a vicious cycle.
That's a very, very good point that speaks to there being a little bit more complexity than this ridiculous thought experiment that I just throw out there. I think I'm still sort of right, but it just showed that it's a bit of a naive thing to say, a bit like cash rate goes up, so property prices should come down. But on either side of the pendulum, right, if the prices are galloping, it becomes a downsizer market, right? Because you get maximum money for your big asset, you buy a lesser asset, and you actually do well in that regard. But if it's a soft market, it's actually good upgrader too. Yeah,
markets do get segmented. You just need some stupid, not well thought out government initiative to incentivize a particular segment of the market, or you need, like for example in Victoria, the rental reforms really tightened a few years ago, and we saw an influx of renovated properties hitting the market because you were getting your landlords who said, well, I've got everything tied up in this property and I haven't got other cash flow, so I need to sell it if it's not meeting minimum standards. I mean, there are all kinds of legislative changes that can impact segments of the market to work at a different speed to others. And I think that was the reprieve for Victoria when we were caught in that chicken and egg flux. We all of a sudden had properties on the market that investors were selling that, that could tick the boxes well enough if they weren't too run down. And then we started to see our vendors get confidence, come back on the market, stock levels increased, and then the chicken and egg was eliminated. But we've just got to wait and see what will break the spell in these really tight, overheated markets.
That's some very good commentary and observations, and further proof to the fact that the property market in Australia is very, very complex. And if it wasn't, economists would be getting it right, but they very frequently aren't. And they're not silly people. We like to sort of make fun of them as being like weather people that get to keep their jobs for being incorrect. But, there's so many segments, there's so many motivators, there's so much psychology that's in it. It's it's a quagmire and not something that's easy to understand. That's why you come here for the truth.
And demographic trends are playing a big part in what's happening at the moment with interstate migration. And so why are people making those moves, When will that change? Will that change?
Well, unless we have any other observations from the month from you guys, we'll go into our gold nuggets.
Now it's time for us to go mining for our gold nugget property tip of the day.
My gold nugget is for CoreLogic to do some analysis, deep dive analysis on the Melbourne and Victorian markets and see if they can get to the bottom of what's happening and how much of actually the government tax on second homes, on absentee property owners, and as marginal increase on land tax, has that changed and impacted sales and also purchases?
I'm going to allow that, Dave. I think that's more of a request than a nugget. I can see you're already halfway out the door on holidays, but I'll allow it. Cate?
I'd love to. It's another request. I'm mimicking Dave here. I'd like to get
that nugget that I just shared was Kate's idea too for our listeners.
I did say I was going to.
I couldn't even come up with my own nugget.
Oh, he's just in Bali mode. I'd love to get my hands on the data for our various state and territory state revenue data, just to see what sort of income our states and territories are receiving from land tax and from all of the sales that are taking place, and segment that further and have a look at what sort of impact is these new reforms, particularly in Victoria, are having on overseas-based investors.
Excellent. Now, CoreLogic, when you get back from holidays in Bali, we've obviously got some homework for you to do. So we'd love you to get involved in that. My gold nugget is I think, touching on some of the stuff that we talked about today. We can see that the movement of interest rates does have a very strong view on sentiment, and I'm hearing from mortgage brokers and buyers agents, people aren't wanting to pull the trigger and make decisions because of what's going to happen in the next month or the next 2 months. Yet you look at the long-term data and rates are actually a little bit inconsequential. So everyone needs to understand their cash flow and have their buffers. But I would argue to people, if you have a direction and a plan and you understand your cash flow and you've done the modeling on whether it can go up or down and you still feel okay, don't get stuck in that analysis paralysis, because had you have done that when interest rates were rising, like Pete's lecturer buddy, and not bought property, you would have lost a considerable sum of money. So that's just something I wanted to share with everyone today.
It's a great one. And actually, quick shout out to Anne-Marie. If she can please grab the data on how drunk our states have become on property tax revenue as a percentage of gross revenue. I think that's like a sort of, feeds into what we're talking about here, because I know that's grown significantly over time. And so the reliance is so extreme on stamp duty taxes in particular. That's probably some good numbers to share with our listeners, how that's grown over, probably the last 30, 40, 50 years.
Well,
and
we
that
can
has a
certainly
huge...
get federal
Sorry,
figures for claims from investors on land tax, because, as we all know, it's deductible, and that will certainly be a great one to see when it's broken up into state-based claims from investors.
Well, we know nationally it's approaching $1 billion a week, which is incredible. And from a state basis, it's a huge part of the pie of income. And you can't tell me that doesn't feed its way into state policy. And it might be getting to the point where they're so reliant on that we're making some changes to housing policy to serve the revenue that doesn't serve the occupants of that particular state. But again, that's a horse's head on the pillow comment from probably some politician.
That could be a whole episode we've just created there.
Anyway, we'll leave it at that. That's been the market update for June. Thanks, guys. We'll see you for the next one.
Have a great one, Dave.